Hey guys, what's up? So in today's video, I have two EV stocks that most of you probably have never heard of. Both of these stocks just went public in the last few months and they haven't seen any kind of price increase. So this makes the case, is it going to explode like a NIO has, like Hyliion has, and basically every other EV company has? But I gotta say, both of these just went public a month ago and we haven't seen an explosion in their share price. So in today's video, I want to introduce you to both of these stocks and whether you should be putting them on your radar or not. So both of these two EV stocks have one thing in common. They are both targeting the largest EV market in the world. So yes, I am talking about China. China is by far the largest EV market in the world, at least expected to be in the next 5 years. So a lot of potential to be had here. And yeah, let's take a look at what I'm talking about. So in this article here by Stock News, it says here, two lesser known electric vehicle stocks that offer explosive potential gains. So they're really trying to capture your guys' attention. Somebody wants you to invest in these companies. So Tesla is currently the leader EV seller in China. However, NIO is quickly catching up, it shows here. But now there are two more upstarts with similar potential, Li Auto and XPEV. Hopefully I'm saying those names right. So yeah, these companies is XPEV, ticker symbol is XPEV, trades on the New York Stock Exchange. Second company is Li Auto, trades on the NASDAQ under ticker symbol LI. So in this article, they're really comparing it to NIO and Tesla, how they've done amazing this last year. You can see here, they show a chart of NIO, how well they performed, and it's basically saying that XPeng and Li Auto could have the same thing happen to their share price. So the total Chinese EV market is going to grow rapidly in the coming years due to secular trends and government support. By 2025, the Chinese government is targeting that 25% of car sales will be EV as part of its plan to reduce pollution. It's pursuing this target through a combination of subsidies, tax credits, investment, and quotas. This country has also added to their battery charging infrastructure. For consumers, EVs are heavily subsidized. Additionally, there's an expedited process for getting permits and licenses, which can take months for gas-powered vehicles. So yeah, this is just basically saying the Chinese market's going to grow rapidly, so there's tons of potential there. But like anything where there's a lot of potential, competition will follow. So saying here, legacy car companies like VW, Toyota, and General Motors are expected to introduce electric models to the Chinese market in the coming years. Additionally, as of 2019, there were an estimated 500 EV startups in China, with 60 haven't unveiled prototypes, although only 10 are in production. So that is pretty crazy, and to me that is a little bit concerning that there's 500 EV startups. I mean, it's definitely really important to make sure whatever company you are investing in is actually legitimate. Sounds like to me there was basically almost 500 Nikolas that tried starting in China that probably aren't working. So hopefully XPeng and Li Auto are actually legitimate and have potential here. So let's carry on with the article and see what they have to say. So a little bit about XPeng. They went public in late August 2020, raising 1.5 billion. It's also recently launched its newest vehicle, the P7, which drew comparisons to Tesla's Model 3. However, while Tesla is going for engineering supremacy, XPeng is focused on delivering comfort, which they believe is a better selling point for the Chinese market. Driving in China can be unpleasant with heavy traffic, frequent traffic jams, and potholes in many of the less developed areas. So that's kind of what XPeng is about. I guess they're just focusing more on comfort. So slightly different from Tesla. So XPeng opened its factory this summer in addition to a contract manufacturer which is building its first model. This gives them a capacity to produce 250,000 vehicles per year, which are more than NIO and Li Auto. It also has 2 billion in cash, which gives us resources to invest in further growth. Okay, so let me just quickly give my thoughts on XPeng, then we'll jump to Li Auto. I think from what they've mentioned, XPeng definitely sounds compelling. Their share price hasn't surged yet. It's basically just stayed flatlined. And yeah, they're targeting a very large Chinese market. However, I'd be very hesitant to invest in this company. We definitely need a lot more information before putting any money into the stock. We would need to see a definitive business plan that looks very promising and that they're actually able to execute on. And I won't be covering all of that in this video. There's just not enough time. So I will be doing a follow-up video where I actually go in depth into XPeng and Li Auto if you guys want to see that as well. But let's carry on to Li Auto to get a quick overview of what they're all about. So Li Auto is a 5-year-old company that raised $1 billion in its IPO in July. Li is different from NIO and Tesla in that it has an electric SUV with onboard gas-powered generators. So yeah, that definitely sounds unique. I've never heard of that in a vehicle. But carrying on, this vehicle is for rural parts of China where charging infrastructure is undeveloped, but there are plenty of gas stations. Essentially, it's like a smart plug-in hybrid without the limitations of an EV, especially if charging stations are not readily available. In essence, it's a practical solution to a problem for many potential buyers, and it's a different strategy from NIO or XPEV, whose vehicles are more designed for urban and suburban dwelling customers. Okay, so I do want to comment on that, but first let's just go into the next part of this article. Li Auto started making deliveries in late 2019 and is expected to produce 4,000 cars in October. It has 31 retail outlets in 26 cities. It has successfully increased revenues and gross margins to 13% as costs come down with increased production. However, it's not expected to be profitable anytime soon given expected spending on autonomous driving, marketing, and more retail locations. Then down here it says Goldman Sachs is projecting Li will sell 445,000 vehicles annually by 2025. So in conclusion, both XPeng and Li have the potential to soar like NIO and Tesla. However, there are many potential stumbling blocks. One advantage for NIO and Tesla is that they're able to build brand equity and market share. While the market was in its infancy, XPeng and Li are attempting to do the same with a greater deal of competition. This means that XPeng and Li will have a tougher time establishing themselves compared to NIO and Tesla. Speed also matters given the number of EVs that will be coming to the market in the coming years. They also have to navigate the challenges of scaling up production while maintaining quality and keeping costs low. Other important factors are building out its retail network and charging infrastructure. Okay, so I'm gonna give my thoughts on both of these companies. First, I just wanna say I can see the appeal. These are two new EV companies that are targeting the biggest EV market in the world, and their share price hasn't skyrocketed like almost every single other EV company this year. So it definitely makes for an interesting speculative investment right now. So just at first glance, with researching very minimally on these companies, I wouldn't invest in them. However, that could change if I do a ton more research and I find more that I like, but I'm going to have to go by Chamath Palihapitiya's philosophy on this one. He believed that you should just invest in the best companies in an industry. See what happens, a lot of people miss out on a Tesla or a NIO, so they're trying to find the next Tesla or the next NIO by investing in companies like these, where in reality they'd be better off just to jump into those companies. I know it sucks that they've already skyrocketed in price, but history shows that basically over the next 10 years, you're likely to be better off investing in just the leader in the market. This is something that Chamath talks about, and I kind of disagree with him on this. But maybe I'm just overall very cautious of the Chinese market, especially seeing that there's been like 500 EV startups in 2019. That makes me quite nervous. And I think the only way I'd personally ever be comfortable investing in the Chinese market if it was something like a Tesla, which I am invested in, or maybe a NIO that is already proven. But to invest in a Chinese EV company that's not proven, that's out of my comfort zone personally. So maybe that's just why I wouldn't. But if you're comfortable with investing in the Chinese market and these unproven EV stocks, then this could be a great spec play for you. But either way, it definitely takes a ton more research than just what I've shown you today. This is just basically what the companies are and a quick overview of them. If you guys want to see a more in-depth video of me diving into one of these stocks, just comment down below and let me know what company you would like to see. I certainly don't mind doing that, and I'm quite interested in to do that myself anyways. So yeah, just let me know in the comments down below if you want to see something like that. Anyways, that's all I have for the video. I'm just not very comfortable with investing into Chinese companies that aren't proven. It's nothing against these companies specifically. I mean, I haven't even done a ton of research into them, so I really can't have much of an opinion anyways. But yeah, guys, let me know in the comments down below what you think of these two companies. Please drop a thumbs up on the video too. It really helps out the YouTube algorithm and to grow this channel. And if you want to see more stock related content, feel free to subscribe. I basically cover all EV stocks, high growth stocks, dividend stocks, and really anything interesting that I find in the stock market that I think would benefit you guys, I do a video on. And I basically just do research all day long. So I do come across quite interesting companies and opportunities. So if that sounds like something you're interested in, please hit the subscribe button. And yeah, that's all I have for this video anyways. So I'll see you guys in the next one.
Oh.